Greetings to you all. Welcome you all. Your boy Chatmaster here at Chatmaster FX. Today we are going to look at the Diamond Standard Operating Procedure, which is named DM. We are going to look at the DM Standard Operating Procedure. So without wasting much of our time, let's go straight into the business of today. So we are going to look at the general information of the Diamond Operating Procedure. So the Diamond SOP is literally an ignored Quasimodo. So guys, you need to visit the Quasimodo tutorial first in order for you to have a full comprehension of the diamond, because you cannot be able to understand it or the principle behind the anatomy of the diamond if you did not understand the Quasimodo. So guys, go to our channel and be able to look at the Quasimodo video, and you watch that video. Once you master one or two things, then you are going to make your life easy, because the diamond setup is not going to be that much complicated, since this is the ignored version of the Quasimodo, as you are going to see as we discuss. So the mentees are expected to understand the Quasimodo first before mastering the Diamond SOP. The SOP demands an understanding of price action zones. So there is this also aspect of price action zones, guys. It's a very important aspect, and usually it involves the top-down analysis from higher time frames to lower time frames, where you can be able to draw some flag limits or some FTR. So it's actually outside the context of this course. So however, I actually was able to simplify the setup or the anatomy of the diamond so that it can be able to suit you. So in the future, maybe I may be able to publish the price action zones, but it doesn't matter much in this course, because this simplified one, you can be able to trade it successfully even without the understanding of the price action zones. So the strategy demands the understanding of the price approaching cost. So guys, as you know always, that there should be a PA in order for you to be able to place a trade. So you will see that most of our big five strategies requires or demands that there should be a PA, which is a price approaching. So you need to also understand and go through that course. We have already started on the price approaching course in our Telegram group. So if you want to be ahead, you can join our Telegram group. We've already started doing the tutorials, and you can benefit one or two. But however, I'm going to do justice to the Telegram, to the YouTube community. I'm going to publish the price approaching course as time goes on. But now, just to familiarize with some of these things, you can join our Telegram group. It's for free, and we have already started our learning process there, and it's so exciting, guys. If you join Chatmaster FX, guys, I can tell you, your life will never remain the same. Your life will change. You will change for good, guys, and you will see that your performance on the market is going to understand it, and now you actually read the market with a different perception, guys, because I know most of the people, they use indicators, of which indicators, you don't need to use indicators in order for you to see these things in a better sense on the market, guys. Your eyes, guys, are the best. You need to see what is happening on the price. So an understanding of things like price action zones can be able to help you guys to see how the market moves, not to rely on the indicator for you to be able to understand the movement of the market. So guys, we are now going to look at the anatomy of the diamond. So guys, here we are on the anatomy of the diamond setup. As you can see guys, for this course we are going to look at the diamond version number 1 and diamond version number 2. So there is a complicated diamond version that we trade with Chartmaster FX, but as I have alluded before, we are not going to look at that. We are only going to look at version 1 and version 2, and these are high probabilistic setups. As I always say guys, that if you see an SOP in the big 5 strategies, it actually means that that setup has got a higher strike rate on the market. So guys, as you can see here on the diamond version, so you can see guys that on the phase number 1 you should be having an MPL. If you want to understand about the MPL, go to our channel and look for the video on MPL. You are going to understand what we really mean when we are talking about an MPL. So this is an MPL type 1, and you can see guys that once we have an MPL, you can see that we had a support here. So once we have a support here, we can see that the price was able to rally up. As the price rallied up, you can see that the price, when the price engulfed this support, you can see that guys, when the price now was coming back, it actually created a quasi-model here, a quasi-model level. Once it created a quasi-model level here, you can see that it actually created a low. Then once it created a low, it actually created a new high. Once it created a new high, you can see that this support is aligned with the resistance. So this is a flip. So this is one of the conditions. So number 1, the condition, there should be an MPL. Once you have an MPL, then you have to identify your support. Once you identify your support, the trend should actually formulate a QM level. Once it creates a QM level here, it actually then creates a low. Once we have a low, then we are waiting for the break of the QM. Once the break of the QM level, okay, then you can see that the price returns to this support. Once the price returns to this support, then we wait for the price to engulf this low. Once we see the engulfment of this low, while the price actually created a lower low, then guys, you have actually seen it on the diamond setup that we were actually selling on the QM level. But now you can see that as the price kept to the QM level, it actually made a reaction to this QM level, but this QM level was not able to hold the price, and you can see that the price actually rallied up, which means that this is a ignored quasi-model. This quasi-model has been ignored. So the price went up. So what happens is that, guys, on the market, when you see a quasi-model like this one, you realize that this quasi-model, once it has been ignored, the price actually goes to a valid MPL. So once the price goes to a valid MPL, then that's where you can be able to place your trade. So these are the conditions, guys, for version number 1. You need to identify your MPL. You need to identify, guys, your flippy area where support tend to resistance. Once you have this condition, guys, and you can be able to see that the head of the quasi-model actually was aligned with the flippy area. But also in another version, you will see on the charts that this QM level may be the one that is aligned with the flippy area, and this head may be actually high, maybe around here, but not reaching the MPL. So that also is qualified as a version of diamond It's actually one of the versions of the diamond. It falls under the version number 1 of the diamond. So this is version number 1, guys, and you can see from version number 2 that we have an MPL here. On this one, guys, you can see that the price, when it dropped, the price actually came and created a QM level here. Once the price created a QM level, you can see that the price actually went to create a higher high. Once the price created a higher high, you can see that this higher high was created inside the MPL area. So this is one of the conditions, guys, that you need to look for. Once you see that this higher high has actually been able to get into the MPL area, then you can consider that as a significant version of diamond. So another thing is that this higher high should not go and engulf the MPL area. If it engulfs the MPL area, then it is not a diamond. So a diamond should be able to reverse within the MPL area, giving us an indication that we are going to come back to the MPL. And once you see that, then it means that when the price comes back to the MPL area, then that's where we can be able to place our trade. So guys, you can see now here that the conditions for this setup is that we need to have an MPL. Once we have an MPL, then the price actually formulates a Quasimodo setup where this is actually engulfed. As we know, once this is engulfed and it creates a lower low, then we wait for the price to go to the MPL area, and this condition also must be met that this head of the Quasimodo should be able to come to the MPL area. So it must come to the MPL area, then we know that the conditions for this setup has been met. So the diamond concept, guys, comes into play whereby if you draw a line here and you draw another one here and you draw another one here and this one going this, you will see that there is a diamond that is actually formulated here. So this is where the concept of the diamond comes into play, guys. This is where the diamond comes into play. So guys, let's go to the terms and conditions of the setup. So guys, on the terms and conditions, there must be a historical MPL. As you have seen, guys, there should be a historical MPL that is clear, that is not yet used. Then when trading version 1 of the diamond SOP, the head of the Quasimodo should occur on the flip area of tail of the MPL. So as we saw, guys, on the charts, that the head must be on the flippy area. You saw that, guys, and you need to make sure that all the conditions have been met. And on version number 2, when trading version number 2 of the diamond SOP, the head of the Quasimodo should occur on the MPL zone. That's the critical condition that I was telling you about. So these are, guys, the terms and conditions of the diamond setup. So let's go straight to the chart examples, and so that you can be able to spot these things in the live market. So as you can see, guys, here on the example number 1, guys, you can see that here on step index M5, you can see, guys, that we were able to have an MPL here. So there's an MPL area. So once we have an MPL area, you can see that we have the support here, and this support tend to resistance becoming a flippy. And what happened is that this price, when it dropped, actually formed a low, and it went to the MPL area. Once it went to the MPL area, it's actually giving you an indication that we are going to come back again to that MPL area. So the condition is this higher high or the head of the Quasimodo should not engulf the MPL. If this was able to engulf the MPL, then there is no trade, guys. There is no trade, guys. If that happens, guys, then leave that currency pair. Look for another currency pair, guys. That happens. So that condition you can see that was made. So this is almost similar to the version number 2. It's actually similar to version number 2. So guys, you can see that when the price actually created a lower low, you can see, guys, that the price went up with momentum. And once it went up with momentum, now take note that now as the price is now approaching the MPL, you know that the market respects the MPL. So once it is now approaching the MPL, you can see, guys, that there was a slowdown in price. The price started to slow down, reaching the MPL area. So guys, this market came with momentum, but here, guys, it was giving you an indication that, guys, we are slowing down, guys. We are about to reverse. So you can see that a price approaching of a 3 drive. You can see that this price actually approached the MPL in the form of a 3 drive. So once you see that there's a 3 drive here, guys, then that's where you can be able to put your trade. You can sell here, guys, and put your stop loss just above the MPL area. So guys, you can see, guys, that also if you are looking at this MP on this Quasimodo, you can see, guys, that this one was the QM level, and you can see that, guys, when the price came here, it actually respected this QM level. It dropped a little bit, it came again, it dropped a little bit, then it finally was able to engulf the Quasimodo heading to the MPL. So guys, that's what usually happens when you are seeing that this Quasimodo is now being ignored, guys. So this is what we call a diamond setup, guys. So guys, you need to look for a PA. If there's a price approaching, guys, to the decision point, then you can be able to place a trade. If there's no PA, no go. No PA, no trade, guys. And you put your target profit on the depth of engulfment of this low. So you look at your lower low, this must be your take profit, your safest take profit. So you can take your partial profits here, you leave your trades running, and once you take your partial profits here, you put your stop loss on break even, and you know that you have secured that trade. One, you have actually banked something in your account, and number two, you know that if this trade, when it comes here and it goes back again, then you know that you don't have anything to lose, because your stop loss now is at break even, guys. So let's go to example number 2 here, guys. We're on step index M5 once more, guys. You can see here we have an MPL here. This is our MPL. As we have our MPL, guys, you can see here that we had a support, guys, and this support, guys, as you can see, it actually turned to resistance, and this flip zone, you can see it extend to this area. So guys, the first thing that you have to identify is what version of the diamond are you trading. And you can see, guys, that here you were trading the version number 1, guys, because remember, the version number 1, the head of the Quasimodo should be on the flip area, and you can see, guys, that this head is on the flip area. So guys, as the price dropped here and it came and it actually created a QM level, and guys, this is our low and this is our lower low, and you can see, guys, that once the price reached this QM, you can see that this QM was not able to hold the price. Why? because we did not have a PA. Remember, when we were trading the QM setup, I said that the price as it approaches the QM level, it should approach in the form of a 3D flippy or compression etc. So here we did not have, and that's why we treat this as setups as a diamond, because once you don't have a PA guys on the QM level, you will know that the price mostly is going to go to the MPL. It's going to look for the MPL, and once it reaches the MPL, then the MPL finally holds the price, and the price can be able to drop. So guys, you can see guys that as the price was approaching this MPL guys, there was a fake out. So fake out is the price approaching that we are dealing with here. Why are we saying this was a fake out? It's because we had a resistance here, resistance here, resistance here, resistance here, and the price finally broke the resistance, going towards an MPL. To be looking for an MPL. Once it finds an MPO, then you can see that the price actually dropped. And where did the price drop? It dropped to the depth of the engulfment of this low, which means we are looking at the lower low as our potential target profit. So guys, this is where you take your partial profits, so that if the trade goes back here, you will know that now the remaining trades are now at break even, so at entry. So once you know that your trades are at entry and you have gained something here, then that trade is actually successful. So guys, this is what you must look at guys. This is what you have to look for when trading the diamond setup. So guys, let's go to example number 3. On example number 3 guys, you can see that we have an MPL here. Go and check the MPL module. Go and check the MPL journal. You need to know what type of MPL this one is. Guys, you need to know these types of MPLs so that you can be able to trade them successfully. So guys, here you can see that once you identify an MPL guys, you can also see that here we have support, and this support actually turned into resistance. So we have a flip area here guys, we have a flip area. We also have a flip area here guys, where support turned into resistance. And you can see guys that on that flip area, that's where we have the head of the quasi model. So here guys is the QM level guys, and you can see guys that this low was finally engulfed by this lower low, and once it was engulfed, the price rallied up to the QM level. And what happened is that the QM level was not respected. Why? There was no PA. And once you see that there's no PA here, then we know that more likely we are heading to a diamond version. And guys, this is what is interesting guys. What happens that when the price is coming here guys, it comes with momentum guys, comes with momentum. But when it actually senses that now we are actually approaching an MPL zone, then the price actually start to give signs that no guys, we have to slow down now guys. We have to slow down because we are reaching a significant MPL. So this is what happens guys. The price has got momentum, but now as the price is approaching the MPL, it actually reduces the momentum. And you can see guys that there was accumulation here. So this is one of the PAs, and guys, you can see that we have the resistance here of touch 1, of touch 2 guys, and once you see here guys, then it's actually giving you an indication that this resistance is going to be broken, and this resistance was broken and the price reached the MPL area. And you can sell here guys, put your stop loss above the MPL, and you can put your target profit on the depth of the engulfment of this low, which is the lower low. So you put your target profit here, you take partial profits here, you leave some trades to be running, put your stop loss at entry, so that when the price decides to come back here, it stops you out on break even, guys, and you know that that trade has been a profit. Why? Because you've gained something here. So guys, this is how you trade the diamond version, guys. That's how you trade the version. So the first thing that you have to do, guys, before trading the diamond, you have to ensure what type of a diamond that you are trading. As you see that we have version number 1 and we have the version number 2. Those are the things, guys, you need to look for. And you can see here that this is what version number 1, where the head of the Quasimodo actually happens on the flippy area, not on the MPL area. So you need to be able to identify what type of the diamond you are trading, guys. So this was boom 500 index on M30, guys. So let's go to the next example number 4. So guys, on example number 4 here, you can see that we have an MPL here. We have an MPL here, guys. You need to look and check for the MPL module, the MPL journal. We are going to understand the types of MPLs, guys. And you can see that once you identify our MPL, what happened? You can see, guys, here that the Quasimodo level was formulated here. Why? And you can see that there was a low here and a lower low here, which actually made it a Quasimodo. And what happened, guys? When the price was approaching the QM level, it actually approached it without any PA, which gives you an indication that this Quasimodo cannot be traded, guys. This Quasimodo cannot be traded. Why? Because there is no PA, guys. So you can see that when the price reached to this QM level, it actually made some reactions. So usually it's a drop and a rally and a drop, then a rally, guys. So this Quasimodo was ignored. Why? Because there was no price approaching. You need to see that there's price approaching. So once you see that on the Quasimodo level there was no price approaching, so usually what happens now, the price looks forward to go to the MPL zone, then it can reverse from that moment. So guys, you need to understand which version of the diamond that you are looking for. And you can see, guys, that in this case, this head of the Quasimodo was able to touch the MPL. So once it touches the MPL, it's actually giving you an indication, which is version number 2, guys. The version number 2, that is what is happening here. And you can see, guys, once it touches here, it's actually giving you an indication that we are going to come back to the MPL zone, and the price actually finally came to the MPL zone and it dropped. And the engulfment here, guys, you can see that it was insignificant, guys. So you see these kinds of insignificant engulfments, they are only they're only okay, guys, to give an indication to a smaller group of people who understand what we are talking about. Because some think that if it's a wiki, then it's not an engulfment and the likes. But those who trade the institutional way, those who trade the smart money concept, guys, they understand what I'm talking about. We are of the same language. We understand our language, guys. So this is what happened, and you can see, guys, that the price was able to reverse from this moment. And you put your stop loss just above the MPL, and you put your target profit, your first partial profits, you put them on the lower low here, guys, and you can leave some of your trades to run, and you put your stop loss on break even, and you know that once target profit number 1 is hit, you know that that trade is a successful trade. So guys, this is example number 4, guys. This is example number 4. So let's look at example number 5. Example number 5. So on example number 5, guys, we are on volatility 10 index on M30. So here, guys, you need to to first identify the MPL. We have our MPL here, and you can see, guys, that we had support here, and this support turned to resistance. Once this support turned to resistance, guys, then you know that we have a flippy area of type SR flippy, and you can see that the price dropped. When the price dropped, guys, and when it was coming to the flippy area, it actually formulated a Quasimodo level here, and guys, you can see that the price actually went to the MPL area, and once the price went to the MPL area, it's actually giving you an indication. This is the higher high of the Quasimodo, guys. Remember, the head of the Quasimodo. It's actually giving you an indication that we are going to come back. We are going to come back, and the price will finally come back, and you can be able to place your trade here. So, guys, one of the things that you have to see is that this MPL actually, the price, the head actually visited the MPL. When it visited the MPL, you can see that it did not engulf it. So once you see that this head comes and engulfs it, the MPL, then guys, leave that trade, guys. The conditions of the diamond will no longer meeting. So you need to ensure that this head is held by the MPL, and once you see that condition, then you can be able to trade it successfully. So, guys, you can see that when this lower low was created, and when the price came back to the MPL area, you can see, guys, we had a resistance 1, 2 here, and the price actually made a fake out going to the MPL area. So we had a PA, guys. So you need to look for a PA. If there's no PA, then no trade, guys. You need just to leave that trade. So here you can see that the price actually was able to hit this. So according to our anatomy, guys, your profit might be here, guys. You might be here. So this is a safest take profit, and you leave your trades to run. But as we go deeper, guys, you understand the issues of clean demand and the likes. Those are some of the target profits that you can target. You understand this concept when you are doing price action zones. When you are doing price action zones, then you are going to understand what I am talking about. So, guys, you can see here that this trade was successful because we had a fake out. So if there's a PA, then you can be able to place a trade. So, guys, that's all about the diamond. That's all about the diamond, and I hope you have learned something from it. So, guys, as I have said before, you need to go back and watch the video for the Quasimodo. Once you look for the video of the Quasimodo, it's going to help you to trade this setup, because as you have seen, that the first version is more or less an ignored Quasimodo. So you need to understand that concept first before you begin to trade the diamond version. So, guys, thank you for watching this video. Don't forget to like, to subscribe, and to hit the notification bell so that you don't miss any of our videos that are going to come. So yeah, your boy Chatmaster here, signing out.